They say that investing in real estate is not a guaranteed ticket to riches. People argue that just buying a property won't magically fill your bank account. And then there's countless people saying that you can make millions in real estate. But then you come to find out that's not really the case. What if I told you that it's true, but the way they do it is just plain wrong? Buckle up, because today I want to give you 5 simple ways real estate investors make millions in this industry. Watch the video until the end. I'm about to share some inside secrets that rarely ever get mentioned. So if you're ready to dive in, let's get down to business. Number 5, stick to an investment strategy. Rather than spreading yourself too thin, choose one investment method and dedicate your efforts to mastering it. Zooming in on one single strategy will help you to boost a deep understanding of its ins and outs. This will not only boost your chances of success, but also make it easier to expand your real estate portfolio in the future. Attempting multiple strategies without a solid foundation can leave you feeling overwhelmed and with limited results. Trust me, you need to polish your skills in one area so that you can build a solid foundation for your real estate endeavors. Once you have a fundamental grasp of your chosen strategy and have achieved a level of mastery, you can then consider exploring other options. Remember, Rome wasn't built in a day, and neither will your real estate empire. Take the time to focus on one approach, learn the ins and outs, and watch as your expertise and confidence grow. This strategic approach will set you up for long-term success and pave the way for future expansion. But how do you do this? Well, first you need to clarify your goals. By clarifying your investment goals, you gain clarity on the type of real estate you want to invest in, whether it's residential properties, commercial buildings, or something else entirely. It also helps you decide on the financing options that align with your goals. May it be through traditional mortgages, private funding, or partnerships. What's nice is that doing this allows you to establish a management approach that suits your preferences. Having a clear understanding of your investment goals enables you to make informed decisions and ensures that all your investments are aligned with your objectives. It aids in helping you stay focused and avoid getting swayed by market trends or external influences. And of course, I suggest you start small. Real estate investment is a long-term game that requires patience and a strategic approach. Instead of going all in with your money from the beginning, it's wise to begin with smaller, more manageable investments. This gives you the ability to gain valuable experience and learn from any mistakes you may make along the way. As you gain more expertise and confidence in the market, you can gradually take on larger and more complex deals. Keep your eyes wide open, because we're just getting started. In a minute, I'll reveal to you a proven and guaranteed way of making millions in the real estate arena. But before that, like and subscribe to the channel. We upload videos every week, so if you want to stay updated, you might want to hit that subscribe button. Help us also to spread this video to others by sharing it as well. And now let's go to number 4. Go for an investment property that can increase in value. When the value of a rental property rises, you have the opportunity to command higher rents and attract more tenants, ultimately increasing your cash flow. Now, if you choose to sell the property, you can potentially make a profit as the value has grown. As the property's value increases, the potential for equity expansion also grows. One way to boost the value of your investment property is by targeting developing markets. These markets typically offer growth opportunities due to factors such as a thriving employment market, demographic changes, and future expansion plans. Another approach to increasing the value of your property is through forced appreciation. This involves making aesthetic changes and renovations that can enhance the property's appeal and value. Look for properties that have the potential for minor repairs and aesthetic upgrades that can significantly boost their value. What I can suggest for you is eyeing rental properties. It can be a great venture for individuals with DIY renovation skills and the patience to handle tenant management. However, recognize that this strategy requires significant upfront capital to cover maintenance expenses and potential vacancies. Looking at the US Census Bureau data, it's clear that the sales prices of new homes, which serve as a rough indicator of real estate values, have shown a consistent increase from the 1960s to 2007. Unfortunately, this upward trend took a hit during the financial crisis. Thankfully, sales prices bounced back and even surpassed pre-crisis levels. While the long-term effects of the COVID-19 pandemic on real estate values are uncertain, the market has shown resilience in the face of adversity. To make the most of this opportunity, be prepared to invest your time and resources wisely, stay updated on market trends, and focus on maintaining positive tenant relationships. Keep in mind that owning rental properties involves financial responsibilities and ongoing management tasks. But with the right skills, patience, and a long-term perspective, you can unlock the potential for a steady income stream and potential appreciation in property value. And second is house flipping. House flipping is all about buying undervalued properties, giving them a makeover, and selling them for a handsome profit. But here's the catch. You need to know your stuff. Real estate valuation, marketing, and renovation are your bread and butter in this game. Unlike those patient buy and rent landlords, flippers are in it for the quick turnaround. They aim to sell those shiny revamped properties within 6 months or less. So yes, speed is the name of the game. But beware, flipping can be a risky business. You see, if you can't buy a buyer fast, you might find yourself in hot water. Flippers often operate with limited cash reserves, which means they can't afford to hold on to a property for too long. That's why it's of utmost importance to have a plan and enough cash reserves to pay the mortgage while you're waiting for that perfect buyer. Now there's another breed of flippers out there who take a different approach. They buy reasonably priced properties, roll up their sleeves, and get to work on renovations. It's a slower burn, but it can lead to substantial returns over time. These flippers are like artists adding value to their properties, one brushstroke at a time. Who do you want to be? Number 3, taking emergency funds seriously. Having a solid plan and backup funds is crucial. You never know when unexpected expenses will pop up. So maintain an emergency fund. Think of it as your safety net, ready to catch you when things don't go as planned. Having enough cash to cover your operating expenses for at least 6 months is a wise move. It gives you peace of mind knowing that even if your investment property faces unforeseen financial challenges or requires emergency repairs, you have the funds to handle it. Believe me, these unexpected expenses can throw a wrench into your cash flow and make it difficult to meet your loan repayments. If you have the emergency fund in place, you can navigate through those unexpected twists and turns with greater ease. Number 2, reading and learning more. Successful individuals in any field have a deep understanding of their skills and continuously strive to expand their knowledge. When it comes to real estate, this principle holds true. Investing time and effort into studying real estate can be a game changer for your financial journey. Immersing yourself in the subject will give you the boost and confidence to navigate the ever-changing dynamics of the industry. Aside from that, keeping yourself informed about the latest trends, market shifts, and investment strategies will also give you an edge over your competitors. Reading more and educating yourself about real estate will provide you with invaluable insights and perspectives. May it be books, articles, industry publications, or attending seminars and workshops, make it a habit to absorb knowledge from reliable sources. Take my word, the more you learn, the better equipped you'll be to make informed decisions and seize lucrative opportunities. Number 1, using leverage and business credit. Leverage simply means borrowing money to invest and paying it back over time. Through leveraging, you can use other people's money to purchase an investment property, allowing you to enter the market with less of your own funds. The key advantage of leverage is that it increases your buying power while reducing risk. With leverage, you can invest in larger properties and potentially earn higher profits. It also enables you to quickly acquire multiple rental properties, which can further boost your income. You can tap into the potential of low-income residences and turn them into lucrative investments by utilizing leverage. This strategy allows individuals with low to modest incomes to participate in the real estate market and build wealth over time. Note that while leverage can be a powerful tool, it also comes with risks. Carefully evaluate your financial situation, seek professional advice, and make informed decisions to ensure that you can comfortably manage the debt and generate positive returns. The point is that although there are simple ways to make millions in this field, success in real estate doesn't happen overnight. It takes dedication, perseverance, and a willingness to continuously learn and adapt. Now it's up to you to decide which approach resonates with your goals and aligns with your skills and resources. And in the world of real estate, we all have our own personal preference. What about you? Which real estate investment strategy resonates with you the most? Let me know in the comments below. Don't forget to like and subscribe to our channel for more valuable insights, tips, and strategies on real estate investing. In fact, we put together an entire video on how to reach financial freedom through real estate and owning rental properties. Click the video on the screen to learn exactly how, and we'll see you in the next one.